What we're going to talk today about is cars, which is an exciting topic for me personally. As a Detroiter, growing up in Detroit, I got into the car industry pretty early and really enjoy it. So I put together a 7-point inspection checklist for buying a car. So whether you're thinking of buying a car, or replacing a car, leasing a car, I think we're going to talk about some of those things and give you some tips. And for some of you who have already done it before, there might be some review here, but I think the car buying landscape has changed quite a bit. Hopefully you can take away a few things, but who doesn't like buying a new car? I know I do. I love going to the dealerships. I love seeing the glossy new cars. It's just a nice experience. It's fun getting something new. There's something about that new car smell that we all really enjoy, but cars can get ugly very quickly. What I put here is a Nissan S-Cargo, widely considered the ugliest car ever made in the automotive community. And I put it here not because the car itself gets ugly, but the car ownership can get ugly, whether it's missing a payment or being upside down on the loan, owing more on a car loan than the car's worth, or just starting to get behind. Over 6 million Americans are 3 months behind on auto loan payments. And the real problem with that is that cars are commonly repossessed. And when you do get behind, it's not something that you won't necessarily feel. If that car is repossessed and taken away, you can feel the inconvenience of it immediately. So the first point on the checklist is finding the right car. And what I mean by that is finding a car that fits your needs, your use case, whether you're commuting by yourself or just driving yourself to work. That could be one type of car. Maybe you're driving with a person and a spouse or a friend a lot. Maybe you have to haul around some kids. Maybe you have to haul around not only your own kids, but your neighbor's kids as well, carpooling. And sometimes that needs to be paired with cargo capacity. When my friends come into town with their 2 kids, they have their car chock full of stuff. It's amazing how much stuff we need to carry around all the time, even for a small group of people. The other thing that you want to think about is, what's your exposure to the car? What do you need to do to maintain it? Do you need a warranty? Do you want that coverage? Do you want that peace of mind? And then there are a lot of times we have to think about car mileage. And what's interesting right now is you need to think about, do you even want a gasoline car, internal combustion engine, or do you want something that is a little more modern with those fancy electric motors? So these are all things that you have to consider now when buying a car. The choices are far more vast than they've ever been. And lastly, you have to figure out, do you want a new car? Or are you going to go out and buy something right off the lot? Or is new to you enough? Can it be a used car? Can it be something nearly new? And as I was talking about buying for typical use, a lot of times we buy for the exceptions. And here's an example. I went to the movie theater, I ordered a medium popcorn, but for 25 cents more, they will upgrade you to the garbage pail sized popcorn, which I did because it was only 25 cents more, and it was delicious. But between me and my wife, we ate only a quarter of it. So we way overbought. And the issue is, if we overbought on everything, if we bought for all possibilities and not really for our actual needs, if we did that for our house and we bought it for our family needs, but then we bought a house that would also accommodate any guests that we might have, or any entertaining or parties that we might want to have, we would all own these colossal, ginormous homes, and yet we don't do that. We buy for our typical needs, except I think in cars. So here's a Nissan Versa. I pulled this car out specifically because the Nissan Versa is actually the cheapest new car in America today. Brand new, you can have this car for about $10,000, and it's a very good, capable 4-door, 5-passenger car. I think it fits the needs of a lot of people, and it checks a lot of the boxes, and yet the Nissan Versa isn't necessarily one of the most popular cars, and that's because as we go through the car buying process, I think we often think about all of those exceptions, the occasional trip to Home Depot to pick up stuff, or maybe the visitor that we'll have in on an occasional basis. And we want to say, hey, I want to be able to drive everyone together in the same car. Or maybe it's a road trip and you're thinking, hey, I want to pack up the car, or hey, I want to go to the mountains and I want to have that 4-wheel drive or higher clearance. And all of these little things, these one-off things, start adding to the needs list on our car purchase. And all of a sudden, that Nissan Versa suddenly becomes a Lincoln Navigator. It's just scope creep. And so what I'd really encourage you to think about is what you need 90% of the time, 99% of the time, and buy for that. Because what you can do is have these one-off needs, and you can go rent a car. For example, 2 weeks ago, I bought a new desk, and I needed a big car because I drive a Fiat 500, probably the smallest car in America. And I went to U-Haul on their 24/7 car sharing service, and I rented a van for $19.99. So I just needed it for a couple of hours, and for $20, I had the car I needed. And on a day-to-day basis, I drive only the car that I actually need. So I think that's something to keep in mind. Number 2, think about the arrangement of the car relationship that you'll have. You can either buy it or you can lease it. These are the 2 typical arrangements that people will have on new cars. And let's talk about the difference in the money. So when you buy a car, it's probably no surprise you'll usually have to put more money down upfront. You'll also have higher monthly payments. In fact, the average monthly payment for a new car sold in America right now is $716 per month. It's an all-time high, and leasing is a little bit different. Sometimes you have to put less upfront. Sometimes you don't actually have to put anything down except for maybe the first month's payment, and then those monthly payments are also usually cheaper. Now, the reason they're less expensive is that you don't own the car. You're only paying for a portion of the car for the years that you're going to have it. And when we talk about the payment schedule, you can eventually eliminate payments when you buy a car. You pay that car off and you don't have any more payments, you can keep driving it. You're driving a car completely free at that point. But if you lease a car, you're always going to have payments. In fact, when you turn it in and lease another one, you'll continue to have payments. And what about freedom? How important is that to you? When you buy a car, you have a lot of freedom. You can put on new wheels or tint the windows and put in a different stereo, but you also have the freedom to sell or drive it or trade it. Especially when the car is paid off, you can do pretty much whatever you want with it. With leasing, you have very strict limitations to what you can do. You can't change the wheels, you can't put in a new stereo. In fact, when the car is turned back in, it has to be in good condition with just normal wear and tear. And then obviously the big one is mileage limits. So if you want to take a car on road trips, got to be within that mileage limit. Otherwise, you'll get dinged for those additional miles. And then over the long term, buying can reduce your overall costs. I kind of like having old cars and running them and using them and having cars without payments. You can keep your costs really low. But leasing, you're going to have those payments. The flip side is you're going to be driving a newer car throughout the leasing period. So even when you're done with the lease and get a new car, you're going to generally have newer cars, and that's a different peace of mind. So it really just depends on what fits your needs best. But these are really two different arrangements you can have on new cars. Now, the third point in the checklist here that I want to talk about is the vintage of car, whether it's a new or used car. Now, can you tell between the red and the silver what's new and what's used? I point that out because sometimes it's really hard to determine what's a new car versus a used car. And so what has the advantage here in terms of money? The used car is usually going to be cheaper. Not surprising. It's what we call depreciation. So you can usually get a really good deal. How about warranties? New cars are usually going to have a better warranty. Maybe they will only have the warranty. If you buy a used car that's 4 or 5 years old, it might not have warranty coverage at all. And what about maintenance? A new car probably going to win this contest too. It's going to be newer. Everything's going to be in new condition. It'll be covered by your dealer. How about getting financing for a car? The reality is here that it's probably actually easier to finance new cars. There's just a bigger industry that supports buying new cars. You can get financing for used cars. You absolutely can. Sometimes the interest rates are a little bit higher. Sometimes there's just fewer lenders to do that, but you can certainly do it. And then let's talk about depreciation. And this is a pretty big one. What car is going to have an advantage here? And the reality is that a used car is going to have an advantage because it's already depreciated. When you buy a used car, you get some of that discount right away. And what I want to do here is just sidestep a little bit and talk about depreciation specifically. So what depreciation is an item that loses value over time. It's just losing value. When you buy clothes, they depreciate. They're not worth as much as when you bought them new, whether it's electronics, which can depreciate quite quickly. A lot of things depreciate the moment you buy them, and cars are no different. In fact, here's a depreciation curve for a typical car in the United States. And what you can see here is that when you buy a car, it's worth exactly what you paid for it on the first day. But after that first year, the car depreciates significantly, and typically about 29% in the first year. You may have heard the term that a car is worth 10% less the moment you drive it off the lot, and that's probably pretty accurate. The moment you drive a car off the lot, it's no longer new, it's used. And so there's a discount that has to be made for that. Now, what you'll actually see here is that after the first year, that depreciation curve kind of flattens out. It doesn't drop off quite as dramatically as it did in the first year. And so if we were really savvy shoppers, what we would do is maybe buy a car in the first year, that first anniversary, because we'd get a lot of that depreciation. We'd be buying a car for 29% off of the original price, and it's only 1 year old. That's pretty impressive. Now, I pulled a list of the top 6 fastest depreciating cars in America, and the number 1 is the Cadillac XTS. 39% of its value is lost in the first year. Jeep, Mercedes, Lincoln, Cadillac, Infiniti, they all lose more than 30% of their value in 1 year alone. And so what I also think is interesting that 5 out of the 6 cars in this list are luxury cars. So cars that you might assume are being bought by people that are really successful, that know money, that are really savvy shoppers. And in fact, if you're buying Cadillac XTS, you might not be very savvy because you're going to lose nearly 40% of that value in the first year. The really savvy shopper might actually be the guy who's buying the Cadillac XTS after the first year. getting that 39% discount over the price of a new car. So just some realization here that especially those new luxury cars that are maybe more desirable don't do so well. And what about warranties on used cars? We talked a little bit about this, and I had new cars having an advantage of the full warranty. And most manufacturers offer a warranty of some sort, either a 3-year like Honda, Mazda, a 4-year like the big three, Chevy, Chrysler, GM, Ford, and even some other automakers offer a 5-year warranty, Hyundai, Kia, Mitsubishi. And so what you get here is you get the remainder of that warranty. So warranties are transferable. They follow the car, not the owner. And so if you buy a car here, say 1 year old, what you'll get is the remainder of that warranty. So in the Honda, Mazda, Subaru, VW, Toyota, you'll get 2 additional years. Chrysler, Dodge, Ford, you'll get 3 more years. And then Hyundai, Kia, Mitsubishi, you'll get 4 more years of warranty. Even though you're buying a used car, you're still getting the remainder of that factory warranty, which can be really powerful. I will also say that many of these manufacturers offer limited warranties even beyond the initial bumper-to-bumper warranty. Often powertrain warranties can last anywhere from 7 to 10 years. So really, the core critical components of a car can be covered for even longer. Now let's jump back into our checklist here, number 4. And what we're doing here is we're focusing in on the payment because this is what a lot of people do. They focus primarily on the payment. Is the payment affordable? Can I afford that payment? Can I get this car? But the problem with focusing on the payment is that's only half the equation. So the payment is always going to be balanced out by the length of the loan. And so if you want to have a really light payment, a really small payment, affordable payment, something that you feel you can handle, you're going to extend the length of that loan out. If you want to have a really short loan, you're going to have a much bigger payment. And so what we notice here is a trend in the industry that people are taking more and more affordable payments and increasing the length of the loan. In fact, the average car loan length right now is at an all-time high, 72 months or 6 years. And so car loans are getting longer and longer. In fact, the 97-month car loan is growing in popularity. And I just saw that the 100 and the 110-month car loans are also getting more popular as well. Those are startling statistics. But you're going to have a car payment for a really long time. So how long should that car loan payment be? The easy answer is as short as possible. But there is a guideline rule of 4 years in the auto industry. And let me explain to you how powerful that can be as you're buying a car. So here's that depreciation curve again. We looked at this. This is what a car will do over time. I want to overlay a 6-year loan balance. So this is assuming that you finance the car 100% on day one and you take a 6-year loan, the average loan that we saw. And I'm also going to illustrate 0%. I'm not going to show any interest in this. If we did, it would even be more dramatic, but I'm just going to show you what the loan would do at 0%. What you'll notice here is that the red line, which is the loan balance, is higher than the car's value, especially at year 1. It's much higher, right? The car is really underwater. The car is not worth what we still owe on it. Even in year 2, again, the car is not worth what the loan balance is, what we owe on it. Even year 3, the car is still worth less than what we owe. It's not until year 4 that we get to a crossover point where the loan balance and the car value is relatively similar. So my point here is that for 4 years, the car is relatively underwater. And so what happens is that if we have an income disruption, like a loss of hours of work or a loss of job, or we need to move out from a sedan into a minivan or something like this, or trade it in or sell it, we're really stuck for the first 4 years. We don't have a lot of options because we just owe so much more than the car's worth. Now, if you take a 4-year loan, I want to show you the same thing here and look at the 1-year anniversary. The car is worth less than the loan. Not quite as much as it was under the 6-year loan, but it's still worth less. But by year 2, now the loan and the car is worth about the same. And so what we've done here is even just by shortening up the loan length by 2 years, now we only have really the first 2 years where the car is underwater. And so it's a much shorter time frame. It's less risk to us because hopefully less likely that something's going to happen to us in 2 years where we might have to make a decision about the car. In a 6-year loan, we've got 4 years where we really can't do anything with it. Now, let me show you one last thing here. Let's say we buy this car after 1 year. We buy a 1-year-old car, like we discussed a little bit earlier on depreciation, and then we get a 4-year loan on that. So here's where it gets really interesting. You'll notice right off the bat that the car is worth more than the loan. And so if we buy a car that is just barely used and a 4-year loan, at no point is the car worth less than the loan balance for illustration purposes here. And so you really have ultimate flexibility, whether you lose a job or have to move or need to change a car or want to change to a different car. you have that capability because now the car is worth more than the loan throughout the entire life of the loan. So it's really interesting, just a small tweak like that. That's why the industry itself recommends a 4-year guideline. So let's go back to the checklist here. Number 5, an affordable payment. So a lot of times we'd say, it'll be great to be able to pay for a car up front, but most of us have to figure out how a car payment fits into our budget. We have to finance it. And then there is the rule of thumb on the payment. Now, I want to let you know that on average, most people spend about 17% of their monthly income on cars. But the rule of thumb says 10%. So a lot of people are spending almost twice as much as the rule of thumb. And that means that 10% of whatever you're bringing in should go to your car. So you want to make sure that your payment is under that. And that's what we can consider affordable. There's also another rule, the 20-40-10 rule that relates to cars. And we've covered most of it now. So the 10 means that your payment should be 10% of your monthly income. The 4 means that the loan should be only 4 years. And the last piece, the 20, represents that we should try to put down 20%. And that 20% down payment is really to make sure that the first year depreciation doesn't hit us as bad. So we've already paid off the first year. And so now we still have that flexibility. We're in control. We're not going to let the car get quote unquote ugly on us. And so if we can stick to the 20-40-10 rule, you should be in pretty good shape. You should have options on the car if you need to switch, but the car should be pretty affordable to you, and you will have it paid off in 4 years. Number 6 on our inspection checklist, finance shopping. So I want to talk about 3 ways that you can get financing, and I would suggest doing them in this order when you're looking at buying a car. First of all, I would go to your local banker, credit union, or wherever you do your normal banking. Sit down with them, tell them you're looking for a car loan, just meet with the banker and see what they can offer you. Since you do business there and you have a relationship, they might be able to give you some pretty good terms. But that's the first place you want to check. The second place is going online. So there are a lot of places that you can apply for a car loan from a private party, from different banks. And to me, one of the best things about applying online is that if you do get approved, what they will often do is send you a paper check, a blank check, which you will then take to the dealership and you'll fill out there if you buy a car. You write it out to the dealership and the check is approved for the amount that you got approved for. But you can write the check out for as much as you got approved for, but you don't have to write it for the full amount. So for example, let's say you were approved for up to $15,000 and you want to buy a $12,000 car, then you just write it out for $12,000. And then the loan payments are based on what you actually borrow. You don't actually have to borrow any more than you need to. And so that's nice. You go to the dealership with the ability to write a check right there. Now, the last thing I would suggest is that you go to the dealership, shop for the car, and apply for financing through the dealer's partners. So they have a number of finance institutions that they work with, lenders, and they'd be more than happy to get you some quotes from them, oftentimes because they have a relationship with them and get a little kickback. But when you're doing that, now you have a quote from your local bank, you have some quotes from online lenders, and you can compare those to what they're giving you at the dealership. So the nice thing is you have 3 options. You can take the best one or the one that meets your needs the best, and you're really in control. You're not beholden to whatever they offer you at the dealership. And then 7, use pricing tools. So there are a lot of pricing tools out there, and as you're doing your research and looking for the car to try to figure out if it's a good deal, you can use some of these websites like CarGurus. There are a number of other ones out there like them. If you have a certain car in mind, you can actually look at that make and model, and it will give you a chart like this saying, hey, here's what a good fair price is. And so what you'll see is that blue line there, that's the average price for cars in different ages of this particular make and model. And that light blue bar is really the range that you want to be in. That's the fair price. Now, if you're above it, it means the car is probably expensive. And if you're below it, that means the car is probably a good deal. So I actually looked at the listing and then I actually plugged it into CarGurus and I put it right there. And what that says is that on this particular car that I looked up, it said, hey, this is a great deal. This is $3,500 less than the typical prices on this car for this make, model, and age. And so I thought that's a great way to say, hey, if you see a car that's interesting to you, and you don't necessarily want to negotiate, you can go in feeling good that even if you pay the asking price, you're getting a good price still. Now, there are lots of other pricing tools. As I said, if you're looking at cars on eBay, they have a market price analysis tool there. Kelley Blue Book, kbb.com, is another great place to go to give you some good pricing information. So you have lots and lots of options. And with those online tools, you have some options for avoiding the old school negotiation route that everyone hates. So big box stores like Costco have an auto buying program where they pre-negotiate some prices and deals for you with the car dealerships locally. CarMax is a no-haggle auto dealership, so you can go and the price listed there is what you'll pay, which is really nice if you want to avoid having to go back and forth and go through the let me ask my manager routine. There are other online car services like Carvana, where not only can you go to the website, look at the cars in the inventory, apply for financing, but then they will even deliver the car to you at the end. It's really purchasing completely online. And then automakers are not oblivious to the fact that this is a growing trend. And so Ford has a Ready Shop Go program, and Hyundai has a shopper assurance program. You can go onto their websites and look at car dealer inventories, find the car you like, apply for financing, do all the paperwork essentially before you go to the dealership, and then you just go and sign and drive away. So all of these really take out the terrifying negotiation portion of the car buying process that everyone universally hates. So here's our checklist. We're going to buy the right car, the car that meets our needs, but doesn't necessarily overmeet them. We're going to decide whether buying or leasing is right for us. You're going to make a decision on whether buying new is more appropriate or if you're willing to buy used, maybe even nearly new. We're going to get the shortest loan possible. If you stick to the 4 years, that's a good rule of thumb. But we're going to pick a affordable payment for us, keeping in mind the 10% threshold. And then we're going to shop around for financing from local banks and online and then at the dealership. And then lastly, we're going to do some research on prices. Before we go and look at a car, we're going to know whether or not that's a fair price. So buying a car is really no different than a lot of big purchases, whether it's an RV, a boat, or a home. Because with any of these big purchases, there are a lot of considerations. And you want to make sure that you go through this process thoroughly and completely so that you are comfortable with what you're getting and the payments that it's going to require so that you don't find yourself in an ugly car situation. I hope you got some practical tips and tricks that you can use on your next car buying expedition.